Imagine you could predict the future. Well, we can't, but what we can do is look at things like economic indicators, statistics, and even forecasts from reputable sources to get an idea of where the real estate market and Canadian economy are today and how they're expected to change in the near future. And that's exactly what we're going to do in today's video. A couple of weeks ago, I was at an event where Phil Soper, the president and CEO of LePage Canada, gave a presentation, and I found it extremely informative. And I thought this is something that it would be very valuable to share with all of you. So we're going to jump right in and have a look. He breaks it down into 3 sections. The first is the economy, then we're going to look at the real estate market, and then supply and demand in Canada. Now, the first section is the economy. So the first chart we're looking at here is with respect to inflation in Canada. And it says monetary policy slows demand as inflation drops to 5.2% in March. Now, this was a couple weeks ago, so inflation is actually down to 4.3%. But what's interesting is the red line here is the actual inflation. The yellow is Canada's target rate, so right around 2%. And the orange is the BDC forecast. So now we're actually at around 4.3%, which is right here. So you can see their forecast for the first month is already on pace, but they're forecasting by the end of 2023, inflation levels could be down near the target range from the Bank of Canada. And what this would mean is that if inflation rates get down to that 2% again, the Bank of Canada can start to ease off the gas with their monetary policy and start to lower interest rates once again. The next thing we're looking at here is the global supply chain index. And it says more downward pressure on inflation is expected as supply chains normalize further. And typically when we talk about inflation, and this is something Benjamin Tall always talks about, he's the deputy economist at CIBC, and he says, with respect to inflation, supply chain typically makes up about 50% of that for any given country. So when the global supply chain index went up because of the pandemic, inflation went up pretty much across the world. And now that we're seeing since about a year and a half ago, these numbers start to come down and the supply chain numbers come down, we're starting to see ease on inflation, and it's expected to continue into the remainder of this year and into 2024. Now, this next chart is a big one, and this is the Bank of Canada's overnight rate. So it looks at some of the past increases we've seen, but most notably this most recent one, which you can see on a chart here, is very severe. So the Bank of Canada has held this rate for 2 consecutive announcements. And then we have the forecast here. So this forecast is predicting that by the end of 2023, this year, we should see our first decrease, just a small one, in the overnight rate from the Bank of Canada. And then into the end of next year, 2024, we should see the Bank of Canada's overnight rate back to a more neutral rate around 2.5–3%. Another important thing to look at is the Canadian labor markets, because people that are purchasing homes are typically working class people that are working in the Canadian economy. So we've seen a little bit of an uptick month over month in February, but the big numbers here, we've seen employment trending upwards since September 22, almost 2%. We've seen more women employed in the market in Canada, and full-time employment continues to trend up just over 2% during that same time period. Now, the first thing we're looking at for the real estate section is sales activity. And keep in mind, these numbers are all for the entirety of Canada. So it's not specific to the GTA or anything, but still good to see as the Canadian economy and real estate market as a whole. So you can see sales activity picks up in February. This is the most recent number they had when they gave this presentation, but March and even into April, these numbers are continuing to increase at a pretty quick rate. A lot of it is because the Bank of Canada held the rates for the second time, but also we're into the spring market, and that's when we typically see demand pick up. And now just a little bit more of a breakdown for variable and fixed separately. We kind of saw this chart with respect to the bank's overnight rate, and that's what's going to affect these variable rates. But again, we could start to see variable rates come down as early as the end of this year. And then next year, if inflation does drop the way it's forecasted to, it's likely we will see variable rates drop pretty significantly. Now on the fixed rate side, you can see the blue, which is the maximum or minimum forecast, is a little bit bigger. And that's because the fixed rate's taken more into consideration with their change. It's the overall economy, it's the bond yields, and similar results though. We've already seen fixed rates come down a little bit, and they're expected to continue to come down as we move into the end of 2024. Now the last thing we're looking at here is supply and demand. And this is one of the biggest fundamental drivers of how the real estate market reacts in the Canadian economy. Now, starting off with population, and this is demand, in other words, in 2022, Canada's population grew by over 1 million for the first time ever, and we're almost at 40 million Canadians. Now, when you talk about population growth and immigration, we've talked about it on this channel before, but these are the planned levels of immigration for the coming 3 years. So up to 500,000 new Canadians per year in the year 2025. Now, it's also important to understand it's not just the immigration that's going to drive higher demand and higher population in Canada. There's also things like temporary resident visas, which we have 3.1 million in Canada, 622,000 international students, and 125,000 temporary that are transitioning to permanent. So there's major population growth happening, not just from immigration levels, but from all different avenues in Canada. And I find this really interesting, this stat here, household size is shrinking and it's a contributor to increased housing demand. So yes, we have a growing population and growing level of immigration and even international students or contract visas, but also household sizes are shrinking. So you need more homes now for every 100,000 new Canadians than you did 5, 10, 15 years ago. And that is compounding the levels of demand that we're experiencing in the Canadian economy. Now, this is probably one of the more concerning pieces of data that's in this presentation. It's with respect to the Canadian housing supply crisis. So it shows in blue here the change in population and then in orange housing completions. And you can see even before the pandemic, the population was growing. We had a dip in the growth levels, and then last 2 years we've seen higher levels of population growth. We're going to continue to see high levels of population growth, but what's really concerning is housing completions have basically been unchanged for the past 25 years. So the big question is, where is all of this supply going to come for the growing levels of population? And finally, just a little bit more of a breakdown when we talk about the supply issues that we're having right across the country is Canada requires 5.8 million additional housing units by 2030 to meet the needs, and 2.3 million are new housing units expected based on the current rate that we're at, but there's an additional 3.5 million units that need to achieve affordable housing for everyone. And this is a hot topic for the last couple of years and is continued to be a hot topic to this date is, where are we going to get the supply for the levels of demand that we're experiencing in the Canadian economy? Now, I know this was a lot of information and we just went over it pretty quickly because we could dive into this for hours, but I think what's really apparent here is, one, we're seeing increased levels of demand in the market and we have low levels of supply. And in the GTA, we're already experiencing a strong seller's market. Just because we're heading into the spring market, we're seeing the Bank of Canada hold interest rates. And based on what the forecasts are here, with inflation dropping over the next year, Bank of Canada start to decrease their rates, I think we're going to see continued levels of demand. And really all signs and pieces of information from this point to the fact that we should see recovery in housing prices from the strong decreases that we saw over the last year or so. Thanks so much for watching this video. I know this is a little different than what we normally do, but we will link these slides down below for you to download. Have a great day, and we'll talk to you soon.